Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to be going over the wheel option strategy. I'll be giving you a detailed explanation of how this option strategy works, but most importantly, I'm going to show you how to use this option strategy in order for you to make consistent income. In addition to that, this video is going to be catered specifically to those of you trading with a small account. I'm going to show you, even if you're trading with a small account, you're still going to be able to magnify your returns. Now, if this sounds like something you're interested in, or you're trying to use options to get some extra income to add to your 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'll be giving you a detailed explanation of the wheel option strategy, and we're really going to be getting down and dirty with options today. I'm also going to show you specifically how you could use options trading with a small account portfolio in order for you to magnify your returns. For those of you that are the real investors and the real traders that usually stay to the end of the video, I'm going to show you an additional bonus to magnify your returns. Without further ado, let's go ahead and get down and dirty with options. Our feature stock for today is going to be none other than SoFi Technologies. Now, you guys know how we do it. We go ahead and we get down and dirty with options, which means we're going to give you a detailed walkthrough of the option strategy we're doing in order for you to be able to follow along. And maybe you're going to consider adding this strategy to your portfolio. So let's go ahead to trade SoFi options down to the bottom in order for us to open up the option chain. Now, for those of you beginners, the option chain is representative of all this information in the bottom here. And what that does is that it gives us enough information in order for us to make a very informed decision before entering any options contract. Now, before I get into this option play, I always have two requirements from my subscribers and also my viewers. Before entering any options trade, make sure you always have an exit strategy. The second thing is always make sure to do your own due diligence before investing. What might work for my portfolio might not work for yours. Always remember that. Now, for the wheel option strategy, we're going to pretend that you're going to start off the wheel option strategy with only cash in your account. So let's say you have like $1,500 cash in your account. You want to get started with options and you want to get started with the wheel option strategy. This is what you do. You're first going to go to sell. You're going to go to put. And then now you're going to go ahead and choose your expiration date. Now, if you're a beginner, you should be doing what's known as monthly options. That way you don't have to manage the trade as much. Monthly options simply mean choosing expiration dates that expire on a monthly basis. So it's already 4 days left for the 23rd of May. So we're going to go 4 weeks out. 1, 2, 3, 4. So 30 days make up a month. 32 days is just a bit extra. We're totally fine with that. So let's go ahead and select the June 20th price. So sell, put, strike date June 20th, and you have $1,500 cash in your trading portfolio. Now we're going to go ahead and we're going to choose your strike price. Now we're going to go ahead, we're going to choose your strike price below the current share price. The current share price is $13.68, but we're going to choose a strike price of $12. Now the strike price of $12 is going to give us an 80% chance of profitability. As you can see, profitability to the top here. Why is this important? Well, this is important because this tells you there's an 80% chance that this trade is going to go in your favor. Now, in addition to your $12 strike price, so 80% chance of profitability, you're going to get paid for this option strategy. The amount you're going to be paid is going to be 0.25 or $25. Each option contract contains 100 shares. So you simply multiply 0.25 by 100, and that's going to give you $25. Now, go ahead, let's click into that. So this first leg of the wheel option strategy is known as the cash secured put. The cash secured put is an excellent option strategy if you're a beginner to options trading, and it's also a good option strategy if you're trying to make consistent income. Now, here's the question. Why did I go ahead and choose the $12 strike price? Well, you guys know on this channel, I don't just tell you stuff, I actually show you stuff. So let me show you why I went ahead and choose the $12 strike price. And for that, let's go ahead back into SoFi. And we're going to open up the SoFi graph by hitting this advanced feature right here. Now we're going to go ahead and go to the 1 year mark. And what I'm trying to bring to your attention is this blue line right here. This blue line right here is one of my favorite indicators, which is the MA200, as you can see right here, MA200, or the 200-day moving average. What the 200-day moving average tells you, it tells you the average price of the stock over the last 200 days. So by using this indicator, if you go all the way to the end, it's going to tell you the price SoFi should be trading at. It should be around $12. Hence, I went ahead and chose the $12 price. Let's go ahead and get back into that option. Okay, so now that you see my reasoning for choosing the $12 strike price, now you have a better idea. Now, how does this option strategy work out? There's actually two ways this option strategy could go. Here is the first way. Come expiration date of June 20th, if SoFi is trading at any price above this $12 strike price here, then two things are going to happen. The first thing is going to be you're going to get this $25. You're going to get to keep that in your portfolio. That initial $25 is yours to keep no matter how the trade goes. That $25 you receive over and over again, that allows you to make consistent income. Now, the other thing that's going to happen from expiration date and this share price is still above the $12 price, you're going to now be able to keep your collateral. Now, in order for you to do the cash secured put, you will have to leave a collateral. The collateral you're going to leave is going to be whatever the strike price is multiplied by 100. Again, each option contract contains 100 shares. So 12 multiplied by 100, that's going to give you $1,200. So your initial collateral that you would have to leave is going to be $1,200, and that's going to get released back to you once June 20th comes by and this share price stays above the $12 price. Now, the other way this option strategy could go is expiration date of June 20th once again, if this share price right here now happens to fall below the $12 strike price, then once again, two things are going to happen. The first thing is, you probably guessed it by now, you're going to get to keep this $25 once again. By keeping this $25 here, that keeps the consistency of you making income over and over again. Now, because the share price fell below the $12 strike price here, now you're going to lose your $1,200 collateral, but it is all not bad. The reason why it's not bad is that now that you lost your $1,200, now you're going to have 100 shares of the stock. Here's the good part. Now you have 100 shares of the stock. You have it at $12 instead of what it used to be trading for initially, which is $12.67. So now you just saved yourself more than $100. And that is one of the most powerful aspects of the cash secured put. Now, don't get lost. The cash secured put is only the first leg of the wheel option strategy. So now that we get what's known as assigned, meaning you now have 100 shares of SoFi in your portfolio at the $12 mark, now you're going to go ahead and switch to the second leg of the wheel option strategy. Now, in order for us to do that, we're going to go ahead now and we're going to switch to sell. And this time we're going to go to call. The reason why we're going to do sell and call is, remember, we were just assigned, we now have 100 shares of SoFi in our portfolio instead of the $1,200 cash that we initially had in our portfolio. So now we're going to go sell and call. We're going to maintain our monthly options. So we're going to keep the June 20th date. And now we're going to go ahead and we're going to sell a call. The price we're going to be selling the call at is going to be the $14 strike price. Now, why am I choosing the $14 strike price? Well, I'm happy you asked. The reason why I'm going to be choosing the $14 strike price is because 14 minus 12 is going to give you $2. The $2 is what's going to be known as the spread. So this is going to be a $2 spread. I will come back to the spread in just a second. So we're going to go ahead, we're going to choose the $14 strike price. And once again, this is a income option generating strategy. So we're going to be paid. Now, this is simply an example. Once you get assigned, you're no longer going to be getting this amount of money, but you still will be getting some kind of income. But we're just going to use the 76 for now. So with the $14 price, we're going to be paid. The amount we're going to be paid is going to be 0.76 or $76. Once again, income option generating strategy. This $76 is going to be yours to keep no matter how the trade goes. Now, there's two ways this trade could go. Come expiration date of June 20th, if this share price here, well, not this share price here, if our $12 share price, because we got to sign at $12. Our average cost is going to be $12. If SoFi is trading at any price below the $14 right here, then we're going to keep this initial money. I can't stress how much this initial money here, how important it is for it to keep generating consistent income. So we get to keep this money right here, and then we get to keep our 100 shares. Now, the 100 shares you have to use as collateral in order for you to do this option strategy. This second option strategy in the wheel option strategy is known as the covered call option strategy. Now, the covered call option strategy is going to be a perfect option strategy if you're a beginner options trader or you're looking to make consistent income. So the other way this trade could go, come expiration date of June 20th, if SoFi is trading at any price above the $14 price here, now we're going to be assigned. Once again, this is a different assignment. In this assignment, now we're going to be forced to sell our 100 shares of SoFi at $14 per share. Now, I did mention to you about the $2 spread a bit earlier in this video. Now, here's the importance of the $2 spread. With the $2 spread, remember, each option contract contains 100 shares. So you multiply your $2, the difference between your $14 here and your $12 here, multiply that $2 by $100. So your gain on this trade is going to be $200. And that's why I would choose the $14 price in order for me to get a bigger, wider spread. So for this instance, you're going to be losing your 100 shares, but now you're going to be gaining almost $300. It's going to be your $200 for your investment gains plus the amount of credit you receive when you did the option strategy. That brings you full circle with the wheel option strategy. So the wheel option strategy can be started at any leg. You either do the cash secured put first, or you could do the covered call first. It does not matter. If you already own 100 shares of the stock, then it makes sense to start with the covered call option strategy. If you only have cash in your portfolio, then it makes sense to start with the cash secured option strategy. Now, for those of you that made it to the end, I did promise you an extra option strategy that's going to help you magnify your portfolio. Now, the wheel option strategy is a perfect option strategy. The one downside to it, though, is it's very capital intensive. Most of the stocks you're going to be trading is not going to be trading at the $13 price. So this is very reasonable if you're trading with a small account. But let's say your account only has $1,500. You cannot do a trade that's going to use almost 100% of your portfolio. That makes absolutely zero sense, and it puts your portfolio at risk. So here's something you could do. So what we're going to do now, we're going to go to buy, we're going to go to call, and now we're going to choose our expiration date. Now we're going to go for a longer expiration date. Let's go for March 20th, 2026. Now, before we do that, let's make sure I get out of this. And then we're going to go ahead and put that in. Okay, so buy, call, strike date, March 20th. Right here, 305 days to expiration. Remember, now you have a lot longer time for expiration. Now we're going to be going below the strike price. And guess what we're going to be looking for? We're going to be looking for that same $12 strike price. Now we don't have it here. So what we're going to do, we could use the 13. I want to show you guys exactly how options are done. Options not black and white. You need to test the waters and see what best works for you. So we're going to be using the date of... Okay, so let's try the February 20th, 2026. Okay, so here we go. We do have the $12 strike price here. Now, if you guys remember at the start of the video, I showed you guys why I chose the $12 strike price. The reason for that is that according to the 200-day moving average, SoFi should be trading around the $12 price. Doesn't matter what anyone tells you, you just saw it right there on the charts. So we're going to choose the $12 strike price. And now this is a pay option strategy. So because this is a pay option strategy, we're going to have to pay $3.90 per contract. Now, let's say you still want to use your entire portfolio. What you can do is simply get 3 of these contracts. Let's go ahead, click into that. We're going to hit continue. Now we're going to hit 3. So that's going to run you even less than buying 100 shares. So now that you have 300 in your portfolio, here's what you're going to do with this option strategy. You're going to go ahead and you're going to do absolutely nothing. This is a different option strategy than the wheel option strategy. This option strategy benefits you if you have patience and you have time. Now, how does this option strategy work? This option strategy works quite simply. We don't have the $14 strike price here, but let's just use the $15 strike price here. You have a very long expiration date of almost a year out. You're looking for SoFi to move up the share price by not much, by any amount. But let's just say it moves up to like $15 from $12. So now you're going to have a spread of $3. Now, here's where you magnify your gains. You're going to multiply the $3 now by 100 shares. Remember, each option contract contains 100 shares, and that's going to give you $300. You now multiply your $300 by your 3 contracts. Remember, you have 3 contracts, and now your gains are going to be $900. Now, do you see how you could magnify your gains by doing absolutely nothing? Good. Instead of making $25 every month or making $276 when you get assigned, you're now able to make $900 in just one option strategy by doing nothing. Now, of course, there are other factors that go into this, like the delta and stuff, but I'm not going to make this video overcomplicated. So there you have it. That is the wheel option strategy in its essence. When trading the wheel option strategy, always make sure you look for a stock that has low volatility. The reason you want low volatility is that you do not want the stock to be spiking up or down in any direction. In order for you to do the wheel option strategy, you need some measure of consistency. So the best stocks to use for the wheel option strategy is going to be low volatility stocks, dividend stocks, or ETFs are the best. However, those stocks that I all mentioned there might be highly priced. If they are highly priced, then consider using this option strategy I gave you as a bonus, which is known as the long call option strategy. Now, if you guys have any questions about any of the option strategies we featured in this video, then let me know in the comments below. I have a question for you guys before I go. Do you guys have SoFi in your portfolio right now? And tell me why. What is the future outlook that you see for SoFi in your personal opinion? Now, thanks for watching. Go ahead, like the video, subscribe to the channel, hit the notification bell to get an alert whenever I post a video, and I do post pretty often. But here's the most important thing. If there's anyone out there you know struggling to grow a small account portfolio, then the best thing you could do is to go ahead and share this video with them. Why not help as many people as we can? And until the next video, remember, keep pushing your investments. Now, one last thing. If you guys need help with trading and options, I do offer one-on-one coaching. I will leave the link in the description below. Keep pushing your investments.